So investing in real estate is becoming more and more attractive to many investors out there that have historically only been investing in things like stocks and ETFs. But it's traditionally pretty hard to invest in real estate. So in this video, we're going to be talking about how you can invest in real estate online, potentially skip out on many of those hassles associated with traditionally investing in real estate. And I want to mention this video is sponsored by Streitwise. We'll talk more about that a little bit later. So let's dive right into the video. Now, the first question that many investors may have is why even invest in real estate in the first place? If you've already got a diversified stock portfolio, then why even think about looking at real estate? Well, taking a brief look at this chart here, what you can see is that over the last couple of decades, real estate has performed significantly better than stocks. And at the same time, there's a lower correlation between real estate and stocks, meaning that when stocks are going up, real estate may be coming down. When real estate is going down, stocks may be going up. So there's a nice little balancing act going on there that means that your portfolio may have less volatility over the long run if you are investing in multiple different asset classes, such as stocks and real estate. Now, in addition to the returns, there are a number of other benefits that come along with investing in real estate. These include diversification, as we mentioned before, cash flow. Okay, many stocks don't provide you with consistent cash flow, but investing in real estate can be a good way to generate monthly or quarterly cash flow. Your investments can also benefit from appreciation. So as the property values in different areas increase over time, that can contribute to greater returns in your portfolio. There are a whole number of tax deductions that real estate investors are able to take advantage of that stock market investors are not. So that is a huge benefit to investing in real estate. You've got the idea of leverage, where you can potentially buy a $500,000 property for as little as maybe a $20,000 down payment. That allows you to significantly leverage your capital. The passive income potential that comes from investing in real estate, the hedging against inflation that real estate provides, and that lower correlation to the stock market are all reasons why many investors look to real estate as an attractive option. However, there are definitely downsides as well to investing in real estate. These include the significant time investment required to find an actual property, close on that property, do your due diligence, get it inspected, fill it with renters. That entire process can take months and months and months. To buy a property outright can be a significant capital investment, and if you're not buying it outright, you got to get a mortgage. That's a whole lot more hassle, time, stress, etc. The liquidity is also going to be significantly lower in most cases. You can't just sell a property in the same amount of time it would take you to sell a stock from your phone. You've got to deal with tenants in most cases. You've got to deal with repairs, maintenance. So real estate can be a bit of a hassle, which is why many investors tend to stay away from it, especially beginner investors that don't have as much time or money to spend on their investments. However, what if there was a way for you to invest into real estate without all of those challenges? Well, that is where the idea of investing in real estate online comes into play. See, over the last few years, there has been a significant wave of new real estate investing platforms that have come onto the scene in order to solve many of those challenges and make investing in real estate in some cases as simple as investing in the stock market. As Robinhood did back in 2013 for stocks, many of these other platforms are looking to do the same for real estate investing. Now, when investing in real estate online, there are two main options for you to choose from. These are either going to be crowdfunding or REITs. So let's dive in and talk a little bit about both of these different options. Now, with crowdfunding, this is kind of a method of raising money. If you're familiar with Kickstarter at all, that platform is built around the idea of crowdfunding. So a lot of different people come together, they contribute money for a project to happen. Same idea with real estate. Okay, instead of a project, it is a real estate deal. So many real estate investors come together, they all contribute a smaller amount of money. That money gets pooled, it goes to buy the investment, and then all the investors own a share of that investment. Now, with a REIT or real estate investment trust, on the other hand, this is actually going to be a company that meets a strict set of criteria that give it tax advantaged status. Essentially, this company has to own real estate and distribute the majority of its profits to investors in the form of dividends. So both of these are ways for investors to get exposure to real estate without having to go out there, go through the months-long process of researching and acquiring a property, filling it with tenants. They can skip all of that, just contribute the money, and then somebody else is going through all of those different steps to make sure that the property has been thoroughly vetted and is filled with paying high-quality tenants. Now let's dive a little bit deeper into REITs and talk about the different types of REITs that are actually out there. In general, you've got three different types of REITs. These are going to be private REITs, public traded REITs, and public non-traded REITs. Private REITs are essentially companies that own real estate that do not trade on public stock exchanges. Now, in order to invest in one of these private companies, you're going to have to be an accredited investor, and you're likely going to have to invest 5 figures or even 6 figures just to meet that minimum investment threshold. The liquidity on your investment is going to be low because you have to sell it to another accredited investor. And the correlation with the stock market is also going to be low because this is not an actively traded investment, so it's not going to be as correlated to the stock market. Now, with a publicly traded REIT, on the other hand, this is going to be a company that holds real estate, pays distributions to shareholders, and is traded on a major stock exchange. You could buy and sell shares of these public traded REITs through an app like Robinhood or Fidelity or whatever platform you use to invest in stocks. As a result, it's open to all investors. You don't have to be accredited in order to invest. And the minimum investment is going to be significantly lower. The cost of one share can be as low as $20 in some cases, with some REITs trading in the hundreds of dollars per share. But in general, you're looking at a much lower minimum investment than a private REIT would be. This means you'll have higher liquidity in your investment because whenever you want to sell, you can just place a sell order on Robinhood or Fidelity or whoever you use. But at the same time, that will lead to a higher correlation with the stock market because these investments are so much more actively traded. Now, a public non-traded REIT kind of draws from both sides of the equation. So you're getting some elements of a private REIT, some elements of a public traded REIT come together to form this public non-traded REIT. So in general, public non-traded REITs are going to be open to all investors, so accredited and non-accredited alike, but they're not going to trade on a major exchange. The only way to buy shares in a public non-traded REIT is to go through the platform that created the REIT, which we'll talk about some examples of that in just a little bit. Now, the minimum investment is also going to be significantly lower, not quite as low as a publicly traded REIT, but typically around the $5,000 range for most public non-traded REITs. Similar to private REITs, you'll be looking at a lower liquidity because these investments don't trade on any major exchange, but at the same time, that will lead to a lower correlation with the stock market as a whole, which can be good for you if you're looking to diversify your portfolio. Now, this brings us to the sponsor of this video, which is Streitwise. Now, Streitwise is an example of a public non-traded REIT in that you're able to buy shares directly through Streitwise. You do not have to be an accredited investor, and those shares are going to have a lower correlation with the stock market as a whole. As a company, they're focused on commercial real estate, so you're not going to be getting any exposure to multifamily or residential real estate through Streitwise. Instead, you'll have access to Class A office buildings in urban and suburban areas in different parts of the country. On the platform, there's a minimum investment of about $5,000 or 500 shares. And after the first year, you'll be able to redeem your shares. Now, I'll mention if you try to redeem your shares before 5 years have passed, there is going to be a discount schedule applied to your investment, which essentially means that if you try to redeem your shares early, you're going to receive less than the net asset value of your shares, unless you're holding them for 5 full years. Now, in general, with any real estate investment, you're going to want to be thinking about this in terms of a longer term time horizon, but it is good to know that if you do want to sell out early, you can do so at a discount. Now, this is just one example of a method to buy real estate online, but if you want to use Streitwise, how does this platform actually work? Well, there's really 4 simple steps for you to get up and running on the Streitwise platform. These are going to be pretty similar regardless of which platform you decide to invest with. First, you'll sign up on their website, which we have a link to in the description below, and you'll be able to browse their current offer. The next step will be to commit some funds. So like we mentioned, there's a 500 share minimum, which equates to about $5,000. And then from there, you're going to receive your quarterly distributions, which you can choose to either reinvest, take it as a check, or take it as a direct deposit into your account. Currently, they're paying out about an 8.4% annualized distribution, and they're shooting for anywhere from 8 to 9% is their target distribution. Once you're invested, you'll be able to track your performance through their Investor Center or through their iOS app. But what are you actually investing in through the Streitwise platform? Well, they've currently got one offering called the First Street Office Inc. This, again, is a public non-traded REIT, meaning you can only buy it through the Streitwise platform. The REIT invests in commercial real estate and currently holds one office park and one office building. They have a strong focus on attracting high-quality tenants like Panera Bread, Wells Fargo, and New Balance, meaning that those distributions are likely going to be a bit more consistent than many other platforms that are working with lower quality tenants. Of the two properties they currently own, one is located in St. Louis, Missouri, and the other one is located in Indianapolis, Indiana. They've got $81 million in assets under management, and they aim to pay out an 8 to 9% annualized return, which they have done for the last 17 quarters consistently. Now, if you want to learn more about Streitwise, we have a link in the description and pinned comment below that will take you to their offering so you can peruse that, check it out, see if you might want to actually get started investing in it. Or if you're interested in investing in other real estate platforms as well, we've got tons of other videos on our YouTube channel that will walk you through different platforms, how to use them, and what their pros and cons are. So feel free to check those out as well. And if you have any other questions about investing in real estate online or the Streitwise platform, feel free to drop those in the comments below and we'll answer you as soon as possible. Thank you so much for watching, and we'll see you in the next video.